Hello, good morning, everybody. Good to see a few of you on this morning. Bit of a shout out to Luke and Melinda. Howdy, James. Alison. Good morning, crew. Good morning, team. Hope you're all awesome and well. Another great day out here in the wild north. Hopefully, wherever you are, things are going your way. Let us know what's going on for you. Where are you this morning? A few people out and about. Hey, at work today. Morning, Sharon. Got all the way from Victoria. Mark. Good to see you, mate. Andrew. Great to see everyone in the house. Well, while things are warming up, and I'm using a little different, a little bit of a different system today. So just getting used to the bibs and bobs, the buttons. I'll do the intro. Jason Witten's my name. You have dialed in or tuned into Wealth Coffee Chats. Thanks for joining. A few of the regulars here, which is awesome. Great to have you. If you're new or you've accidentally found us or something like that, then welcome along. Let us know who you are, what you're up to in the chat. And we'd love to know, if you got any questions as we go along as well. I've got something I want to talk about today, which is pretty interesting. But if you do have any questions, put it in the chat. I'll see if I can get to them throughout the show. We've been doing this as a bit of a crew, bit of a gang for a little while. This is my third year or fourth year into the Wealth Coffee Chats, live each morning at 8:10. So if you're up for a bit of a coffee and a conversation, a chat about property investing and all things in and around that, join me each morning for about 20 minutes, 8:10. I've been property investing well over 20 years. I think it was close to 25. We're doing the math the other day. Coaching and helping property investors as a professional. Started out as a buyer's agent and do a lot more than that these days. For 20 years, we just turned 20. Positive just turned 20 across Australia and New Zealand. So, and we've done a lot of deals. I think I was looking on our stats the other day. It's 10,065 investment properties my clients own. Close to $6 billion worth of real estate. So along the way, we've learnt one or two things, and there's some things that each morning happy to share. So there you go. Good to have you along. Tim all the way from Rocky. Mate, good to see you. You're on the late shift, were you, Tim? Marcus and Scott. There we go. All right, team. Well, today I thought we'd talk about something that's going on. Probably many of you, hopefully many of you know what's happening, notice what's going on, but maybe you do, maybe you don't. Listen, tell me in the chat. We talked about it yesterday. Here for a second. We talked about it yesterday. When did we talk about it? The other day. Some of the challenges. Oh, nice, Beth. Oh, Beth's doing a reno. Good to see Beth. Beachside properties. Yep, they're always good value, that is for sure. We talked about it earlier this week. What's on everyone's mind? The big issue, everyone thinks it's the big issue. I don't think it's the big issue if you have been prepared. I think it's the big opportunity. So what's going on that many, especially the media and many others, aren't aware of, aren't paying attention on. It's something that's going in our favor as property investors. We had the capital growth run in the last few years, which is awesome. A little bit of heat coming out of our capital value. But hey, listen, we've still all gained something significant. Put it in the chat for me right now. What's happening and what has been happening for a while, and there wasn't a lot of attention from the media about it, that is going to benefit us, is benefiting us significantly as property investors right now. Right now, in inflation, yeah, inflation. But what is it linked to? What is potentially part of inflation driving for us, Tim, as property investors that we're benefiting from pretty significantly right now? And everyone likes to talk about the property value going up and the property value going down. Supply, not yeah. Well, that's another one too. Actually, that's another one too. Well, let me jump in here and show you. Well, it's the rents, folks. The rents, the weekly rise in rents. Actually, I'm going to do this. Interest rates. Check this out. Check out the weekly rise in rents since the since 20, like, mid 2020. Okay, now this is the national weekly rise in rents, and you think, okay, well, that's pretty significant looking, because tell me, and this is where kind of like I want to sort of make sure like we all understand. Actually, wrong one here. Want everyone to understand, all right? Why, when you look at that chart there, this is kind of could be a bit boring, but I think it's a bit interesting. Why, when you look at this chart here, team, folks, check it out. Why, uh, if you follow the little mousey here, why in for a decade, like 10 years, tell me, why why were the rents just flatlining for 10 years? What was going on for 10 years in the Australian property market on average? Now, this is not everywhere. This is just kind of the on average. Why did not the rents go up, folks? Low interest rates. Boom. Whoever go to the top of the class, whoever that is, there we go. Low interest rates. Low interest rates, team. Okay. That is what has happened. There was no pressure. There was no real pressure for rents to go up. Values went up, but as we brought properties to market, interest rates went down. They went down. There was an inverse correlation here, and there was no pressure. Now, one of the things that Sam and myself have talked about endlessly is what happens when the pressure is reversed. Right now, we have two things going. We've got two things happening in the world of property investing. And I turn that off for a second. In the world of property investing, two pressures pushing, and yeah, maybe three. Let's just put it like that. Maybe two or three things that are happening right now that are pushing in a positive way the rents in a direction that are getting results like this. Clovelly in Sydney, the average weekly rental rise $381. Anybody put their rents up $381 in the last 12 months or so? That's an extra $20,000. $20,000. That's pretty sweet, right? So, what is pushing up the rents? Well, number one, the interest rates have gone up. Now, that is putting significant pressure on owners of real estate to pass on the costs. Yeah. Your number one expense as a property investor, is your interest. And if that goes up, technically from, 3% to 5%, your major cost has gone up 50% or something like that. Okay. Now, what else is going on with inflation? Inflation, that would equal your ancillary costs as well. So they've gone up. So as a property investor, you've got to pass them on, right? No one else is, you're not a charity, when it comes to this stuff. And last but not least, supply. Yeah, Tim was saying it, lack of supply, right? Lack of supply. Lack of supply is down, folks. Significantly down. Significantly down. We do have some population immigration numbers and all those sorts of things putting extra pressure in there. However, interest rates have gone up, supply has gone down, and what happens regularly, normally, this is pretty normal to pass on that expense, folks, to pass that expense on to what is going on over here, the renter. Check out this. In April 2020, the average rent of all houses around the nation was $439. Now, this is aggregated, and I'm going to dive into a couple of little interesting examples in suburbs, right? So if you have a look at that, $439, and on average, they're at this moment in time, if we have a bit of a sticky beak, $439, $623. Like, do the math on that, team. Now, that's close to $200. $200 in a short period of time. So $200 in 2 years, right? If you have a bit of a look at that, if you have a look at that time frame, let's pop this out and have a bit of a look. $200 here from sort of mid 2020, and we're calling that 2.5 years. And if you have a look at the 10 years before, it like the 10 years before, 366 to 440, less than $100 in 10 years. Crazy times, right? So what does that mean for us as property investors? Well, I'm telling you right now, the rent boom that we were talking about, and, to be honest, we've been talking about it for quite a while. I've been talking about it for at least 2 years, the undersupply, the rent boom. It's here, folks. It's here. It's arrived, and it's still underway. It's not going to get any better anytime soon. And for us as property investors, for many of us sitting here right now, like, we got to make sure that we don't under rent or miss out on the opportunity with our rental income. All right. So we have a look at this. The rents have gone up significantly, and it is a direct correlation. If you have a look down here, direct correlation to the vacancy rates going down, 1.2%. Now, around the country, that means we have a significant supply issue. And unless you've been living under a rock, that is what's going on. What will fix that supply issue, if anything, into the future? How will it be repaired, and how long would it take, right? So let's talk about what we can do as investors right now not to miss out on this stuff, because it's important to understand the mechanism of what's going on. Now, if we quickly go back to this here, I'm going to whack that over here. This is a 2.5 year window, right? Okay, and I want to explain something in a second about what's going on. That's mid 2020, like June 2020 to now kind of January 23. So, 2.5 years. Okay, let's keep that in our mind, folks, as we go along and as we sort of chat through this strategy stuff. So, thinking about this, has the rental boom, has rents increasing fully entered the marketplace? Okay. And the answer is no. Why? Why do I believe we will get at least another year, if not 2 years, of significant rental improvements? Yeah, gosh, no, Lauren, exactly. I believe all of us right now, we will get another at least let's call it 2 to 3 years of good rental increases. It depends on which side of the coin you're on, obviously. Good if you're a renter, not so great. Landlord, excellent. I think we've got 2 to 3 years of rental improvements to come. To come. Okay. Why do I believe that? And what is why does it take so long? Okay. Two questions. Why do I believe that? Why does it take so long? Number one. Yep. That's correct. Number one, the full cost of the interest rates rising has not passed on. It hasn't passed on. It's only been, how long has it been since the interest rates went from really low to reasonably high? Tell me in the chat right now. Tell me in the chat right now, because the interest rate cost rental rise thing has not been passed on yet. So put it in the chat. You guys know this. It's been 7 to 9 months, right? 7 to 9 months since the interest rate stuff started. And to be honest, it's only been probably 4 to 5 months until people actually took notice of it meant something to the cost of their living. So interest rate costs and rises haven't fully been experienced by borrowers, lots of fixed interest rates, and it hasn't been passed on yet, certainly for property investors, right? So whoever said this one here, fixed term leases, all right? So nearly every state of Australia, you cannot increase the rent any quicker than, put it in the chat if you want to sort of play along, what's the time frame of when you can increase your rent? There's only a set time frame, okay? Which is, I think's fair. I think's fair, but you can't miss out. What's the time frame? Can you increase it every month? Can you increase it every quarter? All right. It is 12 months in most states. I think there's one state left where you can do it every 6 months, and that'll probably disappear. All right. You can only put the rent up every 12 months. So the cost of the interest hasn't really come through for the majority of the market, folks. And those, 6 months in Queensland. Yep. All right, QLD. And the cost hasn't been realised for a lot of the market. And then a lot of the market hasn't had a chance to put the rents up yet, folks. They haven't had a chance to put the rents up yet. All right. So we've got all of this stuff going on. And I'm probably going to put a fourth one in here just to drive this point home. We have a supply issue. Okay, so interest rates, there's going to be at least 12 months till the full market feels it in their bottom line, and it's going to be at least 12 months until the market turns over, so the leases turn over in full under this new setting of high rents, folks. Okay, everyone following along? I hope it's making sense, because I don't want you to miss this. And supply is in the toilet, right? There is very little supply in Australia that's going to fix it. Just quickly in the chat, because I'm running out of time this morning. How long is that going to take to fix? How long does it take to fix a supply issue? Get approved, sell, get constructed, get funding. All right, man, I'm telling you right now, that is going to be 3 to 5 years. If you're lucky, if the Australian residential supply of good quality real estate, if you're lucky. I think it'll be longer, but let's just be conservative. And last but not least, there is a population boom that is going to continue to put those pressures on there. All right. So what does that all mean? What was the point of our conversation this morning? With all that stuff? Well, folks, here's the drill, right? Here's the drill. There is something going on, and it's been going on for a while. you and I chatted about this. All right. So you should have already been putting your rents up. And if you weren't, start listening, team. Because as property investors, the market actually moves slowish, and there are indicators, and you can get ahead of making good decisions. At the next chance point you get, I suggest you increase your rents. I also suggest you improve your property. Okay, if you haven't renovated your property in a while, this year is probably going to be a good time to do that. If you can get the right pricing to get your rents up, that can accelerate your rents as well. And the point of it all is, if you get your rents to the highest amount, that'll help you unlock your equity. You get to buy another property and you continue to build your portfolio, folks. Anyway, did that make sense? Hopefully it made sense. Made sense to me, but sometimes when I rabbit on, it might be a bit dislocated. So rents have been going up. They're still going to go up. There's still plenty of reasons why it hasn't fully done its thing yet. And, when you look at these things here, team, folks, when you look at that, that's a nice little curve for us as property investors as we go along. Listen, units have gone up significantly as well. Combined units, combined houses, you name it. Every single type of property is being benefited right now in this rent boom. And, we told you so. We told you so. And I'm glad you were listening, because now we're all on that train. Capital growth happened. Slow down. Now we're going to get our rent boom. This is the game we play. All right. Maybe tomorrow I'm going to continue part 2 of this, because there's something else I want to show you about location and quality of property and where the rents went up the most. So anyway, let's talk about that. Join me tomorrow for part 2 of this little show. And I think we're done and dusted, folks. Hopefully that made sense. I'm over time. I better go. Adios. Join me tomorrow. Who knows the time? Everyone knows that. It's 8:10 for Wealth Coffee Chats. So make sure you join me tomorrow. I'm done and dusted, team. That's it. Adios. Over and out. See ya. Have a good day. See you tomorrow.